What's up everyone, welcome back to another video with the Millennial Finance. I feel like I've been making videos like this for the last year, but yet again, we're in this scenario. Well, markets have been taking a dump and they're not showing any signs of stopping. This time, we're officially in bear market territory and analysts are already starting to call about how long this bear market will last and how much further we have to drop. We are officially in bear market territory when we are 20% below our all-time highs. So this has already happened to the Nasdaq, which is the QQQ, while the S&P 500 is getting close with it being, I think, 18% of all-time highs. In crypto and high growth stocks, things have been much worse though. I feel like we've been in a bear market for more than a year already. They rise faster, so they also dump faster. So what is going on and what should we do? Let's get started. Cha-ching! Let me start by explaining why is this happening. The short answer is something that I've mentioned many times before, and that is inflation. Let me give a bit of backstory. Since 2008, the Fed has managed to keep interest rates at historical lows. When interest rates are low, people are more willing to borrow money. Businesses could be looking to expand their business while taking out loans, while individuals like us could be more willing to take on loans to buy things like house, cars, or even to take a loan to invest their money. Even from a personal point of view, I bought a car last year because interest rates were just so low in Malaysia. It was at an all-time low and buying a car turned out to be cheap. When this happens, the economy really starts to boom because there's just so much money going around and people are so willing to spend it. All of this worked well when inflation was low. However, a supply shortage last year and an overly generous Fed to combat the March 2020 falls has brought an end to all of this, with inflation starting to rise. Over the last year or so, we've seen inflation go up by 5% starting in May 2021, up till an 8.3% increase in inflation in April 2022. Yes, these numbers are purely for the US, but many countries are starting to see inflation kick in as well, and the US in a way impacts every other country. So when inflation goes up, the price of everything starts to go up as well. Things that we need for our day-to-day lives like rice, meat, gas, and lumber all start to get more pricey. Just this week, the Malaysian Automotive Association already came up with a statement saying that they expect the prices of cars to go up because of inflation as well. This could be because, for example, Proton buys car parts from different parts of the world and that price is starting to go up. Shipping those parts also becomes more expensive, and at the end of the day, they have to increase prices to maintain profitable. Even at the food court that I usually go to on a daily basis, I have seen signs from over a month ago warning customers that prices will start to go up just because the price of the raw food that they buy is also getting more expensive. Now, suddenly, our dollars don't go as far anymore because I'm earning the same salary, but I'm paying more for food every single day. And when inflation goes up too much, too fast, the only way the Fed can control this is by raising interest rates, which is exactly what's happening right now in the US and even in Malaysia. They recognize that if inflation goes up too quickly, prices will go up too fast, and they don't want people to borrow so much money anymore. So what do then? They raise interest rates. Now when this happens, suddenly people who have variable interest rate loans have to pay more on a monthly basis just to pay off their interest. So this, coupled with already high living costs because of inflation, means people don't have as much money to spend anymore. So for example, now that I have to pay more money for my food and I also have to pay more for my loans because interest rates has gone up, suddenly, I don't have as much money to buy discretionary stuff anymore, like a pair of Nike shoes. So because I don't buy Nike shoes, Nike sees a decline in their profits, and because of that, they don't want to expand and they don't want to hire people, and it just goes in a loop where the economy ultimately cools down. And this is basically Economics 101, and we're seeing it play out live globally. So yes, we know what the problem is, we know what's happening with the stock markets, but what should we do? First of all, as usual, no one has a crystal ball, no one can predict the future, and whatever I say in this video should not be construed as financial advice. Anyway, the first thing that we need to do is to monitor the impacts of higher interest rates by the Fed. If inflation really starts to taper down, then we'll be fine because the Fed will see that, okay, I've got inflation under control, I don't need to raise interest rates anymore. However, if on the contrary, inflation still continues skyrocketing, then the Fed will have no choice but to again increase interest rates, which will then make the economy even worse off. So what do we need to look out for is basically the monthly US CPI. This is released on a monthly basis, and the last one that was just released last Wednesday showed that we had an 8.3% increase in inflation in the month of April, which was 0.2% worse than expected. So in terms of stocks and crypto, this is my game plan. We always say that we want to buy on the dip, but when the dip actually happens, suddenly we don't have the confidence anymore. I mean, on the 5th of May 2022, the QQQ, which is the Nasdaq 100, dropped by 5%, which for ETF standards is incredibly high, and it almost gives me flashbacks of March 2020. In my opinion at least, this is not like March 2020, and we could be heading to the bottom sooner rather than later. However, I'm not going to go all in because like I said, even I don't have a crystal ball and anything can happen. So what I'm going to do is something that I've said a million times and you guys are probably bored of hearing, which is dollar cost average. I'll be specifically looking for the highest quality companies that have taken the largest beatings, being in the tech and high growth sector. Apart from this, I will also have a big chunk of my investments go towards ETFs on a monthly basis. So one thing that we need to be careful of is a bull trap. What this means is basically a market in a downtrend like we are in right now suddenly goes up very fast, very strong. Everyone thinks we're fine and dandy. There's no more bear market. We're in a bull market now. And then right as we think that, right as we put all our money into investments again, the stock market continues falling. The most important thing at the moment for me is that I only invest money that I wouldn't need for the next 3 to 5 years. So the reason I say this is because if you put all your money into investments right now, if it continues crashing and you need that money for your day-to-day expenses, then suddenly you have to realize your losses and you'll be in a much worse off position. So make sure that you got your savings under control before you even think of investing. If you're still at a young age like myself, then in my opinion, yes, this is a very good buying opportunity over the next few months that we'll be happy we did when looking back in the next few decades. So I'll end this video with a bit of advice. The first one is don't panic and don't FOMO. So most of the times, if we're all partying because we're in a massive bull market and we're all going to be millionaires, that's when things start to drop. On the other hand, when everyone starts to say that we're going to zero, sell everything and go to cash, that's usually a sign that we're near the bottom. So again, if you panic sell or FOMO buy, then you will be worse off. The second advice I have is that you should be picky in what you buy. Many people say that bear markets make millionaires, and I completely agree. This is because things like stocks and crypto will be in massive discounts. If you're able to buy in cheap, then of course you can make a lot of money from it. However, not every stock and not every crypto will recover from this crash. In fact, I would say many of them will go to zero and never see the light of day ever again. So because of this, yes, we do have a generational buy opportunity, but make sure you are extremely picky in what you want to buy. If you're not sure, then of course just buy an ETF. The third piece of advice I have is to keep expenses to a minimum. There's two reasons for this. The first one is that, like I said, inflation is starting to go up. Interest rates are also starting to go up. So build up your savings. Make sure that you're ready for a rainy day. Just in case anything happens, at least you have your cash ready. The second reason is that if, let's say, you have your savings already built up, then having more money to invest in times like these will just amplify your returns in the future. Finally, my biggest piece of advice is for you to only invest what you can afford to lose. I already have some people telling me that they're losing sleep because of how badly their portfolio is performing. I really hope this doesn't happen to you guys. If you guys can't sleep, can't eat and stuff like that, then it's obvious that you're overinvested. So just, remove that, put it into safer investments until you're ready. So hopefully you guys learned something from this video. Economics 101, what to do next. If you're panicking, don't worry, that is completely normal. I have been investing for a while now, and trust me, even I am panicking from time to time. Anyway, thanks for watching this video to the end, guys. Give us a huge thumbs up and subscribe to our channel if you haven't already. I heard that if you do both of these things, then the bull market will resume. So it's up to you. See you guys in the next one. Peace out.